What's up, everybody? Welcome back to my channel. Thank you for joining me today. Now, we are in a very confusing time in crypto's history right now. We have more bullish, fundamental news and use case going on now than literally ever before. But when you look at the price action over the last few years, it is much more choppy than, say, for example, the 2015 to 2017 time when it was literally just slow, methodical move up. Then you look at this area and you see a bunch of craziness and ups and downs and big dips and big pumps. And you can tell because you got some people saying we're in a full-fledged bear market right now, and you have other people saying, oh no, we're bound to bounce right back up and hit new all-time highs by the end of September or October. I tend to not believe either of those two things. And here is some, as Benjamin Cowan would say, dubious extrapolation to kind of back up my theory. I'll explain what all these red and green lines mean in a second, but this is exactly what that is, my own dubious extrapolation. I noticed a bit of a pattern here that has a small chance, a very small chance of playing out, but it kind of backs up what some people are saying needs to happen with Bitcoin and the rest of the cycle. Alright, before we get into any of that, if at any point you enjoyed this video, please consider hitting the like, hitting subscribe, and turning on my post notifications. I'm a super small channel, crypto is getting censored, and any amount of support goes a long, long way. I appreciate all of you watching this video. So, what do all these lines mean? Well, I simply put a red line at the local top and a green line at the local bottoms. So you can see we got 3 points for local tops to go off of, and one more sitting off here that is a bit of a prediction. And we have 2 local bottoms with my prediction right over here. I have these time measurements marked out up here. So from the first local top of 2017 to the bottom in 2018, it was about 371 days, almost exactly a year of downward action. Now from this bottom to this top right here, this local top that happened in the summer of 2019, it was 196 days. From the top of 2019 to the bottom of the March 2020 crash was about 260 days. Then from the bottom to the top of 64K that we just put in, it was 392 days. Alright, so essentially what I noticed here is that from this top to this bottom, it was 371 days. Then from this top to this bottom, it was 260 days. It's about 112 days shorter than this bear trend that we were in. Now this bull trend, from the bottom of 2018 to the top of 2019, was 196 days. And from the bottom of the 2020 crash to the top of 64K was 392 days. So what do we notice here? Well, the bear trends have been getting shorter, and the bull trends have been getting longer. So we do notice a bit of a trend going on here, where the bear phases are getting shorter, and the bull trends are getting longer. Now, past performance does not indicate future results. That's something that we know, obviously, but it can help in our predictions for the future results. So what I did here essentially is, considering that the bear phases, the last two, the most previous was shorter than the one before that by about 112 days. So I just simply measured out about 155 days or so, which is a little less than 112 days, but it doesn't have to be exact. 154 days from our local top of 64K, and that gave me a date of the 20th of September 2021. And I also noticed that the bull trends have been getting longer. In this case, it nearly doubled in the last one. It went from about 200 days to about 300 days. So from that date of September 20th, I simply measured out about a little less than another 200 days on top of this 400, so about 581 days, just to get an approximate prediction for where I think the top of it could be. Now, if this does indeed play out and we get a shorter bear trend and then a much longer bull trend, this would line up with the lengthening cycle theory that some people are talking about. Listen, I know there's a golden bull ratio. I know there's a lot of things that we base our predictions off of based on Bitcoin's history, but we are in a completely new time of Bitcoin's history right now. Bitcoin has gone from being a degenerate way of making money or buying drugs on the dark web to becoming a hedge against inflation, being adopted by many third and second world countries that are being affected by the US dollar's inflation. You cannot argue that Bitcoin is not much different than it was in 2017. Now, with all that adoption, there's also much more reason for people to FUD the price of Bitcoin for many reasons, whether it's to retaliate against the countries that are adopting it, whether it's to simply FUD the price so that financial institutions can get into Bitcoin without missing out on it, because these countries that are taking the first step way before America is. There are many different reasons. And I do believe this was, in a sense, manipulation, and I do also believe it was, in a sense, necessary. In fact, I think if this does play out, then this this big correction could be the sole reason we get to the prices that we think are possible. Bitcoin is no longer being pushed up by retail investors just thinking they're going to make money on it. It is now soon going to be pushed up by all of the countries looking to transfer their wealth into Bitcoin. And I could see this playing out. I could see us consolidating for another few months here, maybe up until September. Maybe we don't even have to come down to these levels. 13K would be scary. I don't think we have to come down to 13K. I think 20K might be a necessity, though. But if this does end up playing out, that would put the top of the cycle approximately at the end of April 2023. And you may say, well, how is the lengthening cycle going to line up with the Bitcoin halvings? The last Bitcoin halving was in May of 2020, so right about here. And we had a 1-year bear market here after the 2017 bull run, but then we had a bit of an anomaly here with this mini bull trend inside of the much larger bear market. So what if we don't get that next time? What if instead of us having this weird bullish price action in what is supposed to be a bear market, we simply get a year-long bear market? And if we do just get a year-long bear market, then that would put the bottom of the bear market right when the next halving is supposed to take place, in May of 2024. Maybe we get a longer bull cycle this time, and then we get a shorter bear market, only a year long, or a bit more than a year, about 406 days. I personally think this is a possibility. Alright guys, this is just some kind of brainstorming I've been doing, trying to figure out what some possibilities are for the rest of this cycle, and there are a few things that make sense here. I'm obviously not 100% convinced that this is going to happen. This is just, and I get I'm really fishing here, but there's always a possibility that this does end up playing out. So, let me know what you guys think of this in the comments. Do you guys think this is a possibility? If you see any issues with my theory here, please put them in the comments. People are getting scared. People think we're going to crash another 50%. People think they're going to lose all their money. We're in scary times right now. But if you just remember, if you hold for 4 years, you're always going to be in profit. So patience is key. Alright guys, thank you for watching this video. If you enjoyed, please consider hitting the like, subscribe, and turning on my post notifications. Really appreciate all the support I've been getting, and I'll see you all tomorrow for my next video. Peace out, everybody.